Hello, everybody, and welcome back to another episode of my investment series. And yes, guys, today we're gonna tackle one of the most requested subjects out of all of my videos, and that is my investment portfolio. It's been heavily requested, guys, but what do I mean with that? Well, I'm gonna be talking about what I have invested in kind of the redlining. I'm not going to be talking about where every single cent is at specifically, but I'm going to give you guys an idea of what I have invested in and where I put my money. However, this is not financial advice at all. I'm just merely showcasing what I have and what I bought, and that's basically that. All right. If you can grab something fun out of it, that is cool, but it is not financial advice. Having said that, though, the majority of my money, as I think a lot of you guys know, is not in real estate. No. It is in cryptocurrency. It is my actual favorite at this point for the riskier phase of my life. So how I would like to describe it is that you really got to adjust your holdings according to your age. And since I'm pretty young, in my opinion, still, I can go for some riskier investments. Some say that the age should be the amount of money you have in bonds. Well, I think that situation changed a little bit now that there's so much uncertainty in the US. However, generally speaking, I would not really go over 80% of my money in crypto. All right, 80% can definitely work. I've had it before, but right now it's about 40%, which is funny enough. But yeah. Most of my monthly income goes here as I really believe is the future and that there are some crazy returns to be made. Now, of course, that is with cryptocurrencies, just holding them. It could also be trading them. It could also be just, I guess, holding on or investing in DeFi right now, which is really, really hot. And it just depends on what period you're watching this video at. You know, it really depends, like what the craze is at that point. It's very volatile, but if you're a long-term holder, that doesn't really matter too much. Bitcoin, Ethereum, XRP, Litecoin, XLM, ADA are all a couple of coins that I hold. Of course, in different percentages. I hold more Bitcoin, I hold a lot of XRP, and it kind of goes down from there. And of course, many more small holds that I have, which I mostly talk about on my Dusty BC channel, where I talk about crypto news. And yeah, that's really the most for crypto, which is, as you can see, also the biggest part of it all. Then the S&P 500 and the bond market. At least that's how I always call it. Some call it differently. But it's my favorite. And the reason for that is it's such a safe bet with also some great freaking returns. You know, it's so safe for the longest time. You could have just invested and gotten an average of 8 or 9% over the last, how many years? Maybe 70 or something like that. And even when the S&P 500 did not even have 500, if you also count that little maybe 30, 40 year period, your average return would be about 10 to 12% a year. And a lot of people like to compare it to real estate and are like, well, why don't you go for real estate? The problem is, if you count it and do the maths properly, there's a good chance that your real estate is going to get you an average return of 6% a year. With S&P, if you can get 50% more at 9% a year, it's a pretty big difference, guys, if you ask me. But yeah, it's a good favorite of mine. It's a very safe bet with great returns. It is a bundle of a ton of different stocks, and thus individual shocks have less of an effect on your portfolio. If one big stock excels, you won't really get the big benefit, and it can be hit by recessions heavily. So, of course, the top part here is the good sides of this, which is like, it's very safe. You know, it has a ton of different stocks, and you're just kind of always good. The bottom part here is that if one stock excels, like for example, if Apple, no, let's go for Tesla. Tesla's not even in there yet, but if it were to be in the S&P 500 and it did exactly the moves that it did right now, yeah, you would mostly notice because people buy into the S&P, not because Tesla itself went up that much, because you have 500 different stocks. Not because it did this much, because the numbers were this crazy, then yeah, I do think you would feel it a little bit, but mostly because of people buying into the S&P, right? And that's the benefit of having one stock. You just feel it a lot. You know, if you have some Tesla stock and it goes up times 4, your money really goes times 4. But of course, the downside to that as well. And my split between the S&P 500 and bond market is kind of strange, because I always kind of mix it up depending on what I feel and what I assess at that point. So I can't really give you guys a good number. And also, my S&P 500 percentage has gone down to about, let's say, 15 or so percent where my crypto holdings are quite a lot heavier right now. I would say about 60 or something percent. And that's because, as I said, I made this in June and I've just been stalling making the video. I don't know why. And I used to always invest every month in the S&P. Right now it's like I just, whenever I feel like it, I just put some in. It's not necessarily every month. Then non-traditional assets, a very big chunk of mine. I would say it's about 20% right now where it is at. And that is Instagram accounts, YouTube accounts, shoes, website, watches, and things like that. I guess the watch sector, I didn't really count that in the percentage. I should have maybe done that. I don't know how much I have in watches. But yeah, Instagram accounts, I've told you guys for a very long time that that's my main thing, what I do. I have a lot of Instagram accounts. I have tons of millions of followers on there. And that just generates so much money that you wouldn't really have to do anything else in your life ever. But yeah, so I also buy a lot of those, which is where you put your money in. Also, of course, they have cost a lot of money, which is an investment, and they are worth money. So that's why it's an investment. YouTube accounts, kind of the same thing, where I bought some YouTube accounts. I kind of have a couple of YouTube accounts. I have in crypto and in all different sorts of sectors. There's only a couple though with my real voice, like you can hear right now. Those are the ones I do every single day manually, or maybe almost every single day. But there's a lot of ones which I don't need to be at, which I've either bought or invested partially in, or you guys know what I mean there. Shoes, I just have a ton of shoes which I bought for reselling, so Yeezys and things like that. I have a ton of them laying around still, really hundreds of pairs, and thus that's also an investment, I guess. And websites, there was a little bit of a period in my life where I was like, websites might be the thing, so I bought a ton of domain names, really, again, baskets full, because I thought that would be good. And also I have quite a lot of operating websites at this point as well, and I can kind of count that as an investment as well. Having said that, another part is cash/savings accounts. I don't know the percentage for that one. I would say roughly 8. I think that has not changed too much, maybe up 1 or 2%. Money on saving accounts and cash, you have to have some very liquid holdings to make sure you can quickly switch investments and for eventual future ventures like real estate. Now, real estate is something that is a safe option, takes a lot of money, and you must know how to leverage it properly. But I always recommend people to get into real estate when they already have a good chunk to make sure it's worth it, but that's maybe just me. I could get a better ROI on my Instagram accounts buying them than I can on real estate, even like 3 times as much. So why would it go for real estate then? Unless you want the safety, but if you want safety, you should normally be able to go for bonds as well without the big down payment. Again, guys, it all depends. There's multiple strategies which are right, but this is the one I go for. I'm not yet into real estate, but I will get into it pretty shortly here, but I'll explain more on the channel whenever I do. So cash and savings are very important. You should always look for the highest saving rate accounts, which are still safe. And I just have some normal cash for what if an investment opportunity were to come around, right? You would always need to have some type of very, very liquid asset. Theoretically speaking, you could have it in XRP, but the risk of your money being at a lower point just after you bought into it is a little bit annoying. To elaborate on that one, with cash, you know just exactly how much it's worth. And if you invested into something like XRP and you need it, and XRP just went down 40%, it's going to be very annoying for yourself to sell. So I would always recommend keeping some money in cash for if an opportunity comes to you. And maybe right now you've never gotten those chances, but I can tell you, all right, the more you're into this type of stuff, the more some opportunities just come across your lawn. They just knock on your door and they're like, hey, this is a good thing. You have some money you want to invest? Things like that. It really does happen. And by the way, I'm sorry if the sound quality is not as high here. I usually record these videos with the perfect microphone. This is just on the MacBook, or the MacBook Pro, seeing how it all works out. Individual stocks, mostly just because I can and I want to risk it. I am not really a fan of individual stocks too much, but I had a lot of Tesla and that did really, really well. So I guess the percentage has also changed a little bit right now. I know it's a little bit chaotic, but it's because I was planning to make this video and it kind of got stalled, and I actually forgot about the percentages too much, and I would have to calculate all my money again to see all the percentages, but this is what it was looking like, and which it will ultimately most likely get back to if all resets a little bit. So individual stocks, they went so crazy. I have a whole different book I could tell you guys about as to how I pick out these stocks. It's not simple. It's a long process. But yeah, Tesla, Apple, I have a lot of these higher price stocks. I don't really go for the smaller cap stocks at all. I just go for a lot of the companies which I think are underbought at this point or undervalued. But also a lot who just are not necessarily undervalued, but just have a lot of growth potential in them, but are already big, you know? I don't know. I just have some crazy tactics for that, but it usually works out. I've never had it go against me, but it's a riskier one, and I'm always knowing that I can lose it all. And then the last part, which is very important, is car. No, just kidding, guys. Car is not an investment. Miscellaneous is, though, because this is really everything that I've not described in the previous slides here. It's like the books I bought, which are a couple $1,000s worth in total now. I bought so many books. There's a whole library full. My equipment for the recording and just everything. I have a lot of computers in storage, I guess, or some in use. Gold, silver, all those things which I don't really have a good percentage of because I don't necessarily know, but just things that you have or have ever bought and things like that, right? You guys know what I mean. Just the miscellaneous stuff. I went about 4% normally out of all my money. So if you had $100,000, it will be about $4,000 worth of equipment. Of course, it depends a little bit on what your operations are. I mean, if you're an IT company and everybody works in the office, it might be that you have a lot more money in computers, right? If you have everything online, it could be that you only need one computer and be done. Just depends a little bit. But that's the situation for me. And I counted books and gold with it as well. But guys, that was it for today's video. Hopefully you all enjoyed it. Hopefully you learned something new. I'm going to test out if the other microphone is just that much better. I will use it from that point on forward then. And also let me know how you like these types of videos. I put a lot of effort into creating them. This one, I guess, was like a medium because I left it over for a couple of months. But let me know and I'll make more just investment series or investment videos and things like that. I'm also going to be dedicating a channel to all my social media growth type of tips and things like that, for which a link will be in the description soon, depending on when you watch this video. But hey, if you enjoyed it, share it with your friends, and I'll see you again in another one.